Well, look, certainly in 2019 we may see oil prices spike through that $100 barrel level. But we think going into the end of 2018, we've kept our Brent price year-end range at between $74 to $84. And already you can see that the Brent price is trading up towards the top end of that range. We really do believe that a couple of things have set in concrete. First is that the Saudis have said they're comfortable with an $80 oil price. So that would tend to suggest to us that they will do in their best endeavours to keep the oil price around that level, either by adjusting their production up or down according to circumstances. And the other is that we've seen somewhat of a cap on US domestic production. It has been tracking between about 10.9 to 11 million barrels. The last read, it just ticked up to 11.1 million barrels. So we still think that there's a little bit of extra capacity there, and that's certainly going to, we think, just keep those oil prices in check. So from the supply side, we think there's enough checks there to keep the oil price down. It's the demand side that does look a little bit queasy at the moment.
And let me just follow up on that, because the counter-argument to higher oil prices, David, is the threat of a demand shock, whether it's brought on by the prolonged trade war or not. Is that going to be a 2019 story? And if so, what is the downside risk to the oil barrel?
Well, certainly we think at this stage that, yes, we're anticipating less demand for oil in 2019. We reckon it'll come in at probably around 99 million barrels of oil a day demand. So that'll be flat on what we think will be this year's at about 99 million as well. So if that's the case, then we're certainly not going to be looking for any fresh production. And the risk is to the downside with demand. Already, if you have a look at the drive season that we saw for this season in the US, it was only towards the end better. Otherwise, it was a fairly mundane drive season. And in fact, data reads for gasoline demand have dropped under 9 million barrels already. So US demand could already be weakening. So we think that's going to keep the oil price pretty much in check for 2018. And with the tariffs, with the expectation of perhaps slowing global growth in 2019 because of these trade wars, then we see demand, as I say, remaining probably pretty subdued, and that's going to keep the prices in check.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.